Kevin O'Leary is someone we all know from Shark Tank, where he is an investor. He's also a business owner, and he has given out a lot of really good advice on investing in stocks. And today I thought I would share with you the rules he repeatedly goes on camera and talks about. He's a great investor. These are some great rules that I definitely can recommend that you follow. Now, the first one, which he really stresses the most, is really diversify, diversify, diversify. Kevin O'Leary usually talks about a 25% rule, where you should not have more than 20% in any industry. So that's, tech, healthcare, industrials, consumer goods, financials, etc. And you should never have 5%, more than 5% in any position. So no company should make up more than 5% of your entire portfolio. These are some good rules. I don't necessarily follow this rule, and in order for this to be relevant, you need a quite large portfolio. If you have $5,000 to invest, there's no reason to go and find 20 companies in 5 different sectors. That's just going to be ridiculous. So this is for people with a large portfolio. Next one is only dividend stocks. Now, this is backed up by statistics, because between 60 and 70% of all the gains in the stock market actually comes from dividend. Now, I think these numbers are real. I've checked it out myself. So Kevin usually says that any stock without dividend is a pure speculation. So he wants guaranteed income. Next one is always have a little bit of gold. Now, gold is something you invest in usually as a hedge to the stock market. So in case the stock market goes crazy and crashes, gold will go up. So it's more like a safety lock. It's like the ultimate diversification away from stocks. Now, when looking at a company, the most important thing, according to Kevin O'Leary, is the cash flow. How much money is the company making? How predictable is the cash flow? How profitable is the company? So he's really a numbers guy. The only question he asks is, how much money do you make on the equity I give you? How much do you make on all investments you make? How much do you make per employee, etc., etc.? So really, cash, cash, cash. The other one is, when you're looking at a company, keep it simple. Now, what he means by that is stick to companies which you can understand. And the simpler a business model is, the better. He really has an eye for simple businesses with a predictable cash flow, where it's very easy to see whether the company is doing great or not. A company he invests in that sells cupcakes is a pretty simple business to understand. You make cupcakes and you sell them. You profit. While, let's say, if you're looking at a bank, like an investment bank like Goldman Sachs, I think very few people can actually understand the business and really see how well the business is doing, because they have massive balance sheets with all sorts of income sources and expenses and investments that no one really understands. So stick to what you know and what you understand. So these are the rules that I've heard him talk a lot about. I think they're great rules. He's a great investor, so definitely some advice to follow. Now, if you want to know more about any of these topics or investing in general, you can visit investingforall.net.